You got it? Okay. All right. Thanks, Darrell. I appreciate the help there. We just had a quick technical issue that we solved. Good evening, guys. Thanks for joining us. My name's Allison.
Hey, guys. My name is Jack. Thanks for joining us tonight.
And we're both traders here at Simpler Trading. Okay, let's restart that. Okay, I don't know if it was recording, so thanks, Darrell. I appreciate it. So once again, I'm Allison.
And this is Jack.
And we're both traders here at Simpler Trading. Hey, good evening, everybody. I'm the Director of Risk Tolerance here at Simpler Trading, as well as an options trader.
And I'm one of the options trading specialists here.
And so today we're going to walk through this webinar and try and get y'all to understand some high probability trades, long-term swing trades, combining data with the technicals. And we really hope that it helps you as much as it's helped us overall with our trading and growing our accounts. So tonight's webinar, what can you expect to take away from it? First, why deciphering the data can be beneficial to your trading. We're also going to introduce you to the long game strategy, which we have both found very beneficial to growing our accounts, and as well as the combination of the data and the technicals and why that can help you grow your account overall. So we've been both listening to you guys in the room, certainly from emails that we've gotten and from just comments to our support team. And these are a few of the things that came in to us here at Simpler Trading. One of them was, I wish we had a few basic option calls. I don't have a clue on all the other exotic positions being taken, and it was a little frustrating. Another comment that came in was, I would love to have some trade ideas for long-term to hold in an IRA account. And of course, I think we've all been there, right, Jack?
Absolutely.
That I've been in the red zone and I'm looking for a simple way to get back to the green, right?
I can relate to that too.
Yeah, right. I think every trader at one point has. And so we listened to your comments, and for both Jack and I, we've certainly been there in the past. And so we wanted to come up with a concept that was very easy to trade, right? Very minimal, you know, not dealing with these complex options, spread trades idea or anything like that, and find a way to combine business internal data and things that we look at on the side, as well as the overall technicals on a chart and how these can make longer term swing trades without you necessarily having to sit at your computer all day. So here are some of the challenges that you may have run into on your trades. I know I've certainly done so whenever I started off trading, right? Getting into too much risk for your account size. I think we've both been there, right, Jack?
Absolutely.
Finding yourself getting in at the highs of a move, right? Getting in right at the top and you think it's going to move higher, and then all of a sudden it just backtracks on you or stalls out. You hear negative news and you think maybe that the chart's going to go bearish, and the stock kind of fakes you out and actually moves higher, right? One of those bad news is good news always situations. Those are always a little frustrating to deal with. So we're hoping that with this long game strategy, it can help you avoid these things while you're growing out your account. So just to get started, a few things that we're going to talk about today. We're going to talk about ourselves a little bit, some quick introductions so you kind of know who we are, about our trading journey, how we came here to Simpler Trading. Then we'll go through noise through the data, the benefits to the data and the business internals, and why that might be beneficial to you overall. We'll, of course, talk about the long game strategy and the benefits to the strategy, as well as our goals, right? What we want you to gain from this webinar and from our class coming up. And of course, question and answer time. Any questions that you have, both Jack and I will be happy to answer them tonight. And if for some reason we don't get to them tonight, please feel free to send us an email or contact support, and we'd be happy to get back to you then there. So here's Jack to talk about his story.
So the start of my journey started whenever I was 7 years old, and it really has to do a lot with my grandfather. He was a pioneer here in Texas, and he was able to really see far, far into the future, and mainly just with making great investments. And whenever I was 7, it started with just going to the office after school, and I would always be quizzed over the Wall Street Journal that he would get every day. And that's not fun, but it was worth, you know, now looking back, you know, thank God we did that, right? And so I was quizzed about what was happening in the market, and then he would talk to me about some of his ideas. As I got older, you know, trading options, or I began to teach myself to trade options during some lengthy recoveries that I had in my life that was just basically I had health issues and I had a lot of downtime to start educating myself on something that I knew that was worthwhile. So from self-teaching, I grew a $12,000 account to over 100K in a very short time. And I knew at that moment that that's what I wanted to do. And
yeah, I think if I did that at a young age too, I would be hooked on it for life. So totally understand.
But however, here's the part. I had also, and this is, I love telling, I'd also experienced many, many pitfalls. I actually ended up losing all of my profits. I decided to invest in a new cannabis company that was completely fraudulent. I had no idea. And that's the biggest lesson is, oh my goodness, I just lost all that money as a young person. And oh my gosh, am I ever going to get it back again? And that makes you question things, So that's one of the major points in my life where I really had to take a look back. And I think that GIF right there from the Big Lebowski kind of explains it all. And so the start of my journey, after making so many costly mistakes, my approach really needed to change. And so I do have a degree in psychology from the University of St. Edwards here in Austin. And I understand the market and the buying and the selling and kind of how the market moves. So I used my education to help me understand, supply and demand and the movements in the market. I decided to dive into mastering options. I picked up Trading in the Zone by Mark Douglas, and of course, Mastering the Trade by, of course, John Carter. And that became, those two books and audio tapes became my Bible, and surprisingly easy to read and understand. And the reason why I like Trading in the Zone, because it really focuses on trading psychology. And that's where I could really relate. And I said, oh, I can do this. So here's some lessons that I learned along the way. And this is really important. So taking profits when you should. Now, what does should mean? Well, in high volatility markets, it could mean that you take 30%. And then in lower volatility, it's okay to take profits possibly at 50% based on your personality and your trading plan. Also, it's important to know, and this was one of the hardest lessons, was being over levered or trading too much of my account, right? Breaking what Allison talks about, the 25% rule, which is so important that she'll touch on later. The most important part that I love to talk about is learning to not constantly stare at the screen. And I learned this straight out of college. I had a job with a lot of responsibility, and I ended up running grandfather's multi-million-dollar construction company. It was high stress, a lot of responsibility. And at some point I needed to take a break. And so I decided to just plan a trip around the world and visited 18 countries. I ended up living in Peru in the Sacred Valley, which has horrible Wi-Fi, but it was a great opportunity to learn the importance of not constantly staring at the screen. And so on my break, my well-deserved break, I put on some long, way out into expiration, Delta 5 calls on Tesla. I bought some stock, and I just let it go, and I didn't look back. And I realized that whenever I found myself to be profitable, whenever I finally looked at those positions later on and coming back into the United States, I realized one very important lesson, that if I would have been looking at the screen, I would have not have been profitable at all. Because the moment I start looking at the screen, I make emotional-based decisions, and that always gets you in trouble.
Oh, I've certainly been there too, Jack. I can completely understand that.
So another epiphany of mine was, guys, I was never good at math. In fact, I really hated math. And even whenever I was a young kid, my grandfather would explain to me, we were watching maybe CNBC or any type of news where it was showing the stock tickers. I was like, what is that? What does it mean? And he would, tell me what it means. But in school, I really struggled with math in general. Whenever it came down to university, whenever I was getting my degree in psychology, I really excelled in statistics. In fact, statistics 1 and 2 were the only math classes I would ever make an A in. And so what I think of statistics is my brain thinks it's just an abstract art form, and I'm super right brain, very creative, artistic. And I found that statistics was something that I could really relate to. So once I understood the probability of options trading and understanding how you know, like trading in the zone and mastering the trade talks about. It talks about working with probabilities and the necessity of risk management, which Allison is a prime, awesome example of this. She's the queen of risk management.
Thank
perfectly.
you. I try to be.
and she's great at it. And a trading plan, I was on my way to becoming a successful trader. So understanding the necessity of risk management and trading discipline was the great epiphanies that I can talk about in my trading career.
Thanks, Jack. So some of you guys might know this, some of you don't, possibly. So my name's Allison, like I mentioned. I started off my trading journey actually fresh out of college with a BFA in theater performance. To help support myself while pursuing a career in theater, I was introduced to the idea of trading actually from my dad. And, you know, when he first brought it up, I was thinking, yeah, this might be a good idea compared to waiting tables, having to stay out late at night, deal with cranky customers, and just hoping and praying for a good tip. This might be a better way that I can, you know, help support myself while trying to pursue my dreams. So my dad had actually dabbled with trading in the past, but was looking to further his own education with options. And so when he started to look for that, he brought the idea to us three kids, and he thought that maybe we should all learn at the same time. And of course, I was probably the only one interested on jumping on board because I didn't really want to do waiting tables at the time, right? So I decided to go ahead and jump into learning, and I did self-education as well, much like Jack. And with that, I, you know, basically got a paper account and successfully made 10,000 in that paper account to show that I was dedicated to learning this and really wanting to succeed in it to better profit not only the account itself, but also have a freedom in my life to be able to pursue what I wanted and still be able to make money. From there, once I made that 10,000K in the paper account, I dove deeper into the education. I actually took some one-on-one coaching. And on my first real money trade ever, I had already recouped my total of all my coaching fees that I would have, as well as an overall profit. So from there, I was instantly hooked. And trading soon became a second passion of mine, which, you know, to me, I thought was going to be, you know, just a kind of a side thing to do overall to help, you know, pay the bills and stuff, right? But instead, I really found myself enjoying it and diving further into the education. But within that first trade, there was actually an underlying problem bubbling under the surface. And that problem was that I had not truly grasped the full understanding of risk tolerance. It was as if I was hitting the punching bag and thinking I was the greatest in the world, right? Kind of like Muhammad Ali, like I'm better than anybody. I know I got this. I had full on confidence, which is, you know, good sometimes, but it can also hurt you in the end. And for me, it hurt me whenever I went into the ring and took that first knockout, right? I was completely stunned by the loss. I didn't understand how I could end up losing that much. And that's when I really took a step back and I decided to take an extensive investigation into my trading and discovered a few different things from kind of doing some investigation work, if you will. So as I did my investigation, there were a few things that were negative to me when it came to my trading. And I'm sure many of you have dealt with this as well. I feel like it's almost a pitfall almost all new traders run into. And I'm certainly was no exception to that rule, right? One of the first negative things I realized is that, much like Jack mentioned, my eyes were always glued to my charts. And what ended up happening is I would also be glued to the futures long after market was closed, right? So later in the night, once China opened, I'd be staring at the screen, wondering what was going on over there. I would soon follow through with Europe. And I found myself going into number 2, which was a lack of sleep due to how many trades I had on and to always watching the markets because I was so concerned about how they could end up affecting my current trades in the US markets here. And of course, with those two things combined, right, with those powers combined, my emotions started guiding my trading instead of the technicals. So I found myself playing more to my emotions, you know, determining with my fear of when to get out or when to get in, or, you know, the FOMO action of the fear of missing out and trying to jump in when it was too late. And all of this is what ended up leading to a staggering loss, right? This is what kept bringing me back to my losing trades, almost like the dark side of the force, right? It was calling to me, and I accepted without really realizing what I was doing. So when all of these issues stemmed, I realized it was coming all from one source, and that was capital risk. And in turn, it was also what my own personal risk tolerance was. So this lack of understanding around capital risk is what fed into all of my negative thoughts about trading. And when you have a buildup in these negative thoughts, it continues to feed into the dark side, right? It continues to feed all of those negative emotions that you have bubbling in you, and is what's leading to those losses. And this is what causes me more emotions to guide my trading, and it also led, like I mentioned, to further losses along the way. So once I realized what was lacking from my trading plan, I adjusted my internals around my full attack plan, if you will, for trading my account. The strategies and technical analysis I had learned would still be implemented, right? There was nothing wrong with the trade setups or what I was doing, or the strategies I had learned. However, by becoming conscious of capital risk and what my risk tolerance was, I could lead the accounts towards success instead of blowing them up, because by having that understanding of risk tolerance, I soon became less emotional. I wasn't staying up as late at night. And that's what led me to be more profitable. So risk started to become my main focus around trading. And that's, kind of why I'm full on risk here. I love stressing it. Anyone wants to talk to me about risk and trading, I am happy to have that conversation, because I think it's just so important to learn. And each trade I took, I constantly was analyzing my risk versus reward on the individual trade, as well as what that capital risk on the trade was doing to my overall account. And this focus is what actually helped develop my 25% rule for account management. And that's actually one of the freebies that you're going to get at the end of this webinar, is kind of a document going over the 25% rule in more detail. And I really hope that it can help you guys out in understanding capital risk, not only for an individual trade, but how you can break it apart into managing your account and never finding yourself overextended in your capital, not finding your account all of a sudden blown out, and ideally help you build it up in maybe what you might consider a more conservative way, but a way that's not leading you through emotions at night, that's not keeping you up at night, maybe watching the futures market, and is allowing you to pursue trading in a positive way like you wanted to from the start. So with this understanding, there was no more dark side of my trading. I found myself enjoying trading once again and creating a great way to support myself and all the other things that I wanted to do in life.
Feels great to be your own boss, right?
Yeah, it definitely does. That freedom of being able to travel anywhere and all I need is a steady internet connection to trade is a wonderful feeling. So now I'm going to hand it back to Jack, and he's going to kind of discuss the noise through the data and how the benefits of deciphering the news and business internals can really help you in choosing longer term swing picks, as well as just overall portfolio picks to build your account with.
Thanks, Alan. So like she said, we want to make sure that we want to give you a clear understanding on how to identify long-term opportunities. And so it's our goal to inspire you with new ideas for, just like we said, the long game. And so noise through the data. What data are we looking for? Well, it's a combination of sales and earnings announcements, number one. And we look for, the data that we're looking for is, first of all, are they profitable? Have there been a consistent amount of losses? Number two, is the company innovative? Are they looking to expand into new areas? Are they sticking with what they know? And how does that help or harm them? Number three, what are the CEOs saying about their own companies? Like, what is the company culture? Like, how do they operate? What is the complete picture of the company whenever it comes to the higher ups? Breaking news. Is there any big news stories that could in turn affect the stock price? So,
and just to note on that, Jack, I know for the innovation from a company, if y'all are just looking for example, the one that instantly came to my head just now was, and maybe some of you guys don't know this, maybe you do, but there's a gaming company out there called Activision. And not too long ago, they actually came out with a new release for one of their very big games called Diablo. And everyone was really excited about it. All the long-term fans were excited. And when they released it, they mentioned, oh, no, this isn't a PC game anymore. This is a mobile game. And it completely did not resonate with the crowd. Everyone was upset. Somebody asked if it was an April Fool's joke at one of their Q&As, and it definitely hurt the company, and it actually hurt their stock to where it went a little bearish. So that's what we kind of mean by, is it helping them with the innovation, or is it actually going to end up hurting them maybe in the overall charts and in the stocks?
I remember reading all the threads on that in Reddit. I
Yeah,
remember
right?
how everyone was so disappointed. It was so bad. Okay. And so the business internals and data can be important because it could give you an early edge. And this is what we want to talk about in our class, where the stock might move before the rest of the bandwagon jumps in. And this is, the point. There we go.
Can you go back?
Oh, no, just down one. Click on
Yeah,
it?
there you go.
There we go. So who is this for? Anyone. Okay, so this is interesting. So anyone who likes to have Bloomberg or CNBC on and is kind of plugged into what we call, quote unquote, the zeitgeist or the business ether of the world, and has been misled by the late data trade ideas, or took action along with the rest of the bandwagon when the move might have been running out of steam. Just remember that the media companies are owned by billionaires, all right? And so also to hear through the noise of false news, and this is important, versus what is happening behind the scenes in line with the technicals. So my 5 steps to considering the trade. So first of all, it's very basic. We start out very wide. What is my directional bias and why do I feel this way? So, and then is the news catalyst or earnings report, is there something shaky about it? Do I sense that there's something less dependable? And it's not so much a sense, but whenever you consider listening to earnings calls, looking at white papers, considering government contracts, which is something we'll talk about here in a second, then you can kind of start to narrow in your perspective and have a stronger view. So number 3, how do I see the underlying in 6 months or a year? And this is where seasonality is so important. Number 1, what I like to reference is Home Depot's seasonality in 2018 and 2019. And seasonality can be applied to many of the popular underlyings, of course, but that's just one example. Now, here's where we start narrowing in. We start to narrow in with technicals. And so it's simpler trading. We have TTM squeeze. We've got a different variation of moving averages, of course, just like every options trader, but also what are the voodoo lines telling me? Do I have ready, aim, fire, buy or sell signals? And what time frames are we working with? And also the Bollinger Bands. Are we making second or third deviation moves, or are we trading within a tight range? So these are all things to consider. And if you can see that I went from very, very wide open with that number 1. What is my directional bias and why? And we narrowed it down, and we're looking for more confirmations as we start to decipher the data. So does this create a complete picture for me to take action? Well, that's the thing, is you make that decision whenever you're ready. And so my first example is Nike. And so I have a strong directional bias in 2018. And so you can see where that red mark is. It really took off of that 8 simple moving average and the 34. And then we had strong directional bias on what seemed to be harmful news. This is when, if y'all recall, whenever Colin Kaepernick decided that he would kind of be an outlier, more or less, and there was really, really harmful news. You heard, oh, Nike's everything's just bad, bad, bad. This is a bad move for them to endorse him. And the moment I saw that, because I've been doing this for a very long time, the moment I heard that, I went in and I bought those calls. I was long Nike. And I knew it was going to explode, because this kind of thing, and this is what we'll talk about, is sometimes bad news can be great news. With AMD, if you see this gray concrete box right here, in buying long calls in AMD, this is in 2018 as well. You had a lot of buying volume. You had a post-earnings great beat, and you started to trade above the moving averages. The stars were aligned. It was 2018. 2018 was basically the story of, everyone's kind of mining Bitcoin, but also the gaming industry had a huge influx of changing out the equipment. And so AMD is actually one of the underlyings that I've been paying attention to for 6+ years. So I really have a good understanding as to how AMD acts just in the stock market in general. I also had a bullish directional bias. The news, I remember, I had a bullish directional bias for AMD in 2018, and it's because I was so familiar. Now, the news was worthy and respectable. That's number one. The climate was right for growth, and adoption was completed by 2 confirmations. Okay, so taking considerable market share from competitors, namely Intel, NVIDIA, and moving on, widespread adoption was the added bonus of the disruptive tech. And just to tell you a little bit about AMD briefly, is they have the 7 nanometer chips that are basically a new architecture for semiconductors or any type of processors. It's a completely new kind of liquid, easy to use, just a great, I mean, the product speaks for itself. By this time, a lot of us are using AMD without even knowing it, and it's certainly favorable across the gaming industry. So AMD, I call those long calls. I talked about it a lot in the room. Yeah, some of y'all are, talking about that, remembering that I was talking about that. And that brings us to Lulu. If you look in the middle of your screen and then to the right, you can see that I paid attention to earnings. But the great story about Lulu for 2018 and 2019 has really been the retail side of growth on the men's side. Now, it's already pretty much assumed that most females get their yoga pants from Lulu, but it's such a quality product, and they have a great business plan and the switching over of a new CEO, where 3 great things to kind of catapult its, the stock price or the value of the company in general to all-time highs. Now, Lulu is now competing with Nike. Well, Nike's a timeless brand with tons of money and cash flow, and confirmed as a disruptor, like I said, a quality product and excellent leadership. I knew that at some point Lulu would start to be, in the stock market, a major competitor. So with Tilray, one of my favorite names, you can hear me talk about this in the rooms, it is in the cannabis sector, and it has high borrowing fees. Now, I've been paying attention to the cannabis sector for a long time, and whenever you have high borrowing fees and the short interest float is very high, this can allow for giant moves. And if you recall, at the very end of last year, this is what me and John Carter did, and we took advantage of a nice pop to the upside and took away some pretty nice profits. And other underlyings across this sector kind of share the same characteristics. Also, I asked myself, what is the regulatory red tape, especially in this sector? So that's a very important catalyst to consider. Is there a lot of legal red tape? What's the expiration? What are they trying to get past? And what does the future look like for them? Tilray is a great example, because the story for 2018 was they got billions, and I like to refer to this as Coca-Cola money.
Right, absolutely.
A ton of money into a new industry, and basically it's, what I call a Peter Thiel, who's taken a chance, right? And so Tilray has been working, they're expanding, and they are a 2019-2020 story. And, most likely in the 20s, we'll be hearing about Tilray as well. So catalysts worth considering. Here's what we'll talk about. And this is like the main point for one of my examples, is considering government contracts. This is really, really important. And my favorite example is in 2014, 2015, Taser was getting all the government contracts because there was a public outcry for more efficiency. For Taser had cloud computing called the Axon cloud computing, police officer cameras where they could stream straight to the police department. There was a ton of millions, hundreds of millions of dollars in government contracts that Taser ended up getting. And I recall talking to Jim Cramer on Mad Money one time. I said, well, what's the future of Taser? I think it's going to explode based on all these government contracts. And he said, absolutely, it's a 2015 story, and it certainly was. So with that said, we'll talk about in the class, how do you find government contracts? I'm trying to help paint a picture to see clearly that this isn't more about chasing news story. This is about looking at the larger forces in play. This is about the slow moving stuff. Once you understand that there is a lot of money behind something, it's really hard to stop that train. Anything in motion stays in motion. So
absolutely. And just to note on that, to kind of set ourselves up here, if there's going to be a lot of stuff going on recently with infrastructure and stuff that's going to be happening here in America, if those bills pass through, This is something that we might want to consider taking a look at, is what companies are getting these contracts to help build with this infrastructure, because those might be the ones that we want to lean towards for longer term portfolio picks, especially if the technicals are lining up with them.
And you know what's great about this is it's very reliable.
Yeah.
You know, it's a real thing. Government contracts are a necessity, and in this case, I could not think of a better example. So with, you know, the second example is the brand timeless or embedded in our culture? And Nike, Microsoft, Amazon, we can all kind of agree that, you know, those are going to be around for a long time. And I joke about this with Allison. If there were just a few people left on this planet, it's a high probability that if they saw the Nike logo, they would know that that's Nike. And so,
absolutely.
So also, is it a disruptor, and what does adoption look like? And I think of Tesla, AMD, and Lulu as the kind of prior examples to this as well. So these names do have a lot of catalyst, and this is what we'll be talking about as well. So I'm going to hand it over to Allison, and she's going to talk about the high confidence trading strategy.
Yeah, so now we'll dive into, we kind of have an understanding of what data we like to look for, why it can be important for those longer term swing trades and portfolio picks. But now it's about matching that data with the technicals, right? Because even if you have that data, you might not be getting in at the best entry point. And so when you combine the two together, that's really what helps make this long game strategy so successful. So just to kind of dive into that, of course, many of us here at Simpler Trading have a high respect for the technicals that we look at on our charts. However, like I just mentioned, there can be a benefit with matching the data that you're deciphering with the chart technicals that you are seeing. So the benefits of combining analysis with the technicals is what makes the long game strategy that Jack and I have been creating and working on. And this is a great strategy for growing accounts while not necessarily sitting by the computer all day to do so, right? So if you like to have a life, unlike us who are here at our computer all day, or if you are maybe, busy with your own job, or if you have kids or you're in semi-retirement mode and want to, relax and enjoy the world, this is a great way to still put your foot in the game with trading without necessarily sitting by the computer all day in order to do so. So what are some of the benefits of the long game strategy? Some of them are excellent entries, right? Overall conviction of strength. Is it, working out for you? Is there still a lot of momentum and flow behind this to where it will continue to the upside or to the downside even? And learning when to take profits. I think this is a great place where the technicals can benefit you, and understanding where you can take those profits off the table and not necessarily get caught in a downturn or pullback. So let's talk about the excellent entries, right? If you have the great data on the company, you may not be getting in, however, at the most opportune entry point for an actual trade. The technicals on the charts can help you line up the best point of entry for you to get into these longer term swing trades. Technicals can also help keep you from getting in when the chart might be seeing some shorter term exhaustion. So you can get in at a better price point. You're not getting in at a high and having to hold through the dip before it gets back up maybe to your high again or gets above that for you to have a profit. So here's one of the examples I have on Hershey's. For those of you who are maybe an options member and have joined me on my end of the day stock picking sessions, you might have heard me talk about this. And what I really hope to benefit from this class is on those end of day stock picking sessions, I often come in there straight with a list. We go over the list that I had from the last video, and then we go through the new list. But I don't really explain why I'm finding these symbols. I just kind of give them to you and say, here are some trade ideas that I like. And so with this, I'm really hoping to teach y'all how to fish, right? I'm showing y'all how I come up with these picks and why I think they're beneficial. So Hershey's was one of those. And Hershey's had some excellent technicals, and you'll see this often on a lot of the time frames and a lot of the examples I use. But you can notice here the overall buildup that we had from our entry point. You can see these bullish signals starting to line up with the momentum, the compound breakout tool, and the squeeze, which we'll go through in further detail later. Now, Hershey's, along with the technicals lining up, also at this point in time, we knew a few different things was occurring with the data side. We knew that there was going to be a run into earnings, which can sometimes see the overall price move higher and trend higher going into that announcement. Sometimes the options value start to increase in price due to that uncertainty around, what's going to happen with that news. But the other thing we had here was seasonality, in the sense that we are going into the Easter holiday. And Hershey's, it's not only just a US holiday. Hershey's owns Cadbury, so it has its footing in, worldwide chocolates, quote unquote, for those of you who are fans of England and things like that. And so we knew that that was coming into play as well. And there was that possibility that that could also help push the price higher. And I myself ended up locking in $220 profit per contract on this trade. So I walked away with a decent profit. I didn't want to hold it through the earnings announcement, just because I typically don't like to hold these trades through that news that's occurring. However, I do remember one of the traders in the room had mentioned that they got out some and still continue to hold a few contracts of it into the earnings announcement, and ended up walking away with something like over $5,000 of profit, which is always exciting, right? I love hearing when not only I get to walk away with a profit, but when all of you guys get to walk away with a profit too. So I was very happy to hear that. And you can see that it continued with what the overall trend was showing us into those highs. So here's Hershey's also on the weekly chart, right? These are long-term picks. So it's not just the daily chart that we'll be focusing on. It's also the weekly and potentially even the monthly timeframes for these longer term style picks to match with the data. And the weekly chart, as you can see here, was very similar to the daily in that everything was starting to build up. We were having all of these bullish indicators. And so everything looked like the right time to decide to use this as a longer term swing trade for my account. So next up is that technicals can show the conviction of strength, right? If the data you're looking for can match with the strength shown on the chart, it can allow for some strong moves. Sometimes these moves can happen pretty quickly, and other times they can be strong moves that last for a few months or even longer. So I'll go through two different examples here, both one that happened really quickly, as well as one that, took a few months to work out, but still was showing that conviction of strength overall. So the first one was on a longer time frame, and for those of you who have been in the room, you might be tired of me talking about this, but SPX is such a prime example of showing that conviction of strength. We've seen this move occur both back in 2016 and 2011, whenever we came down to test these support levels. And I mentioned if it started to break these levels, the only times that we've seen it break these levels in the past 20 years is back during the dot-com bubble going into the early 2000s and during the housing crisis going into the recession. That's the only time we've ever really broken these support levels. All the other times that we've gone down to test it, we've usually seen a strong bounce back up, going back to the highs that we had prior to the move lower, and sometimes even surpassing them, or typically surpassing them, right? So in the case that we had recently from this downturn, you might have been sitting with your account. I know some of the traders certainly were, and they were, maybe freaking out. Should I be getting out of my stock? Or is this all going to be the end of everything, right? Should I be getting into puts? This is a major downturn. What's going to happen here? And we can see that this move ended up occurring, right? And it started to break, right? So I was a little bit cautious going into the end of December, but those last few days of December actually saw a bounce back up. And if you notice the blue dots here, that's one of the studies, the ATR trailing stop. It held that support level. And when it held that support level, that was a sign to me of saying, hey, this might not break, it might actually bounce and match what we saw back here in 2016, as well as here in 2011. In January, we started to confirm that bounce. And that was the time to look at going back long in the market, whether you were doing it on, maybe long leap calls in SPX or just rising bias trades in there in general, or whether you had some overall stocks, honey badgers type stocks that you were looking at and looking to get into those with the push higher that would come from the market. Now, to go with this, the data that started to come out, of course, at the beginning of the year was that the Feds decided that they weren't going to raise have any interest hike rates or anything like that, right? They weren't going to raise rates. They're going to keep them steady. And so that news helped propel the market higher. But we also already had the technicals confirming that this was likely going to happen. So the data came in, it confirmed the conviction of the strength along with what the technicals were showing us. And that's what brought us to recently getting up and creating new all-time highs from where we were prior at the middle to end of last year. Notice also some of the other technical indicators that we had were also showing some bullish signs and are continuing to print some bullish signs as of right now. Back here, we had some levels of exhaustion starting to occur. So that actually might have given you a hint that a pullback was going to occur into the end of last year. And now we're starting, at least as the looks of it, starting to set up for a bullish trend, which after we went back up and tested those highs, you can see for the next few years, we continued to see an overall push and move higher. I don't think there's a way I can zoom in. You can zoom in though, guys, on the webinar itself. So if you go into the right-hand corner of your screen, you should see a little magnifying glass just under the settings button and stuff. And from there, you can actually zoom in on this and take a closer look at it if you want. I'll leave it on for a second. But like I said, I've been talking about this for quite some time. So I know some of you might be tired of me talking about it, but I think it's just a great example of showing how the data can match up with the technicals, show that conviction of strength. And in this case, it lasted a few months, right? So even if you didn't jump in January, there was still that follow through in February going into May now that you could have jumped in and still made a decent profit along the way higher.
And I'll just say right now, it is certainly a pleasure to jump in here and hear one of the main authorities in the country trading SPX. And
I don't know about main authorities, but SPX I've been trading since the start of my career. So it's been a good 10 years I've been keeping an eye on this one.
Well, I know the positive feedback.
So the next example I want to go over was a shorter term move, but it still had the data matching up with the technicals. And this was QCOM. So QCOM, prior to this, looked like it was in some consolidation. However, we were holding our moving averages. We were seeing some positive bullish indicators down here on the awesome oscillator, the compound breakout tool, the squeeze, that were all signaling for a potential move higher. The next day, we had the news come out that Apple and QCOM had settled their whole lawsuit, and that helped push the price higher. So depending on when you got in that day, you could have certainly looked at a nice profit, but we were technically starting to get those indicators to pop up prior to this move. So the technicals were already giving us a hint, and the news helped confirm that conviction of strength. Even if you jumped in here at the high of that next day, maybe you were, fear of missing out or trying to jump on the bandwagon. Well, the good thing about that was the technicals weren't showing any exhaustion as of yet. They were still valid and showing strength that this could continue. And as you can see, the next day we gapped even higher and continued to trade to the upside from there. So QCOM happened really quickly, but it still allowed for a nice follow through with the data matching with that conviction of strength.
You mean to tell me that FOMO is real? Fear of missing out is a real thing?
I know I was a part of it when I was the first
Absolutely.
trader. Yeah. So, but this one, at least here, showed you when you matched it with the technicals, right? If you took out the emotion of being FOMO, even if you got in at the high of that day, it still allowed for a positive move to follow through afterwards. So last but not least, learning the technicals on learning when to take profits. So technicals can also help you time when to take profits on high probability swing trades. Sometimes this can help you take multiple profits off a daily chart while still following the longer term trend on a weekly or monthly chart. So a great example of this for me, one of my better trades of taking these shorter profits along the way was AVGO. And AVGO, I jumped into, I want to say about 3, maybe 4 times. I want to say it was about 3 times that I jumped into this. The daily chart was showing a lot of bullish conviction as we continued to the upside. And in total, I ended up locking in $7.20 of profit per contract. So it was an outstanding profit I locked in along the way. But even if you hadn't done that, right? Even if you hadn't decided to take profits shorter term off the daily chart, which for me, I do that because, like I said, risk is such an important thing to me that when I see profits, I want to protect them. And when I notice moves down to supports that we're holding, that was my entry point to jump back in and keep recycling that capital risk and that profit to making greater profits without keeping that initial risk out there for so long. But even if you had decided to keep that initial risk out there, maybe you were away on vacation and didn't want to, spend the time looking at the daily chart. AVGO on the weekly chart was once again showing that follow through to allow for this bullish trend to occur. So as I mentioned earlier, we're not only looking at the daily charts, right? We're looking at the weekly. We're sometimes even looking at the monthly charts to allow for this continuation of strength, this conviction of strength, to continue to follow through. And so had you just taken this action on the weekly chart and held through, even now you would have seen this nice bullish follow through. Of course, the signals down here were all starting to match up as well. And you certainly could have gotten out for a similar or even a greater profit than what I might have done by jumping in and out of the trade several times. So, and as Jack mentioned, he talked about Lulu some. And though I didn't jump into this trade personally, I did pull up the charts, and I just wanted to show y'all how, once again, the technicals were lining up with the data that he was showing. So back here, whenever Jack and I were talking, he mentioned that this was going to be a good time to buy whenever we saw that pullback and hold of those levels. There was a bad earnings. People were a little nervous, but we had those longer term hedge fund buyers looking at this as a better opportunity to jump in. And so that was a great time to do so. I believe Jack ended up jumping in there. And as you can see, it was a pretty good time. We actually started to get some rising bias signals down here, and you can see that follow through that occurred. Back here was another example of when he mentioned that he was looking to go long on Lulu, and that's exactly what we saw through this earnings announcement. And even if you had jumped in after earnings, you still would have seen that strength and follow through of the trend based on what the technicals were showing us. Another example that he talked about earlier was Nike. Nike, a similar situation. Whenever he talked about jumping in during that Colin Kaepernick news and how, people were thinking, why would you endorse him and stuff like that? Well, I pulled that up on the same time frame of a weekly chart to take a look at it. And you can see the technicals were all lining up with what he mentioned, right? So even though there was some quote unquote bad news around it, it actually, bad news was good news in this case, and it helped propel that price higher. It brought attention to Nike, and it allowed more investors to maybe trickle in and allowed that push up in price, which if you had based that with the technicals and timed your entry, would have allowed for an excellent profit to be taken off that. So another example here, Eli Lilly, this one, once again, as you can see, a lot of these charts look similar with the technicals that we're seeing down here. Eli Lilly, of course, is one of the bigger brand names. They, when I was looking at this, had a lot of things going for them on the business internals. They're, of course, one of the bigger pharmaceutical companies out there. And on this trade, I got in on February 6th, got out on the 21st of February, and ended up locking in a nice $3.10 profit on this trade due to the technicals I was seeing, as well as the underlying data that I had done research on with this company. Once again, we saw the daily chart. Here's the weekly chart. You can see the weekly chart was also in line for this longer term move and for that longer term profit to be taken. So that one I was in for a little less than a month, but it still allowed for a nice profit to be had in my account. I was able to lock that in and recycle that capital back to put into new trades. And I believe this is one of my last examples, but Match.com, right? So Match.com is
welcome to the 21st century.
Right. Welcome to how people like to date nowadays. What's interesting about Match.com is that unlike, younger people using all the dating apps out there, I'm not even familiar with them myself. But with all of them using the apps out there and everything like that, Match.com is actually a place where a lot of baby boomers, from the data and research that I've done, go to, right? They're not looking for maybe a hookup. They're looking for a longer term relationship. They want to find their one to spend the rest of their life with. And Match.com is actually one of the main sites that they go to. So knowing that, there are more people of that age group looking to find their true love, if you will, that was building a lot more interest into this company. Oh, that's good to know, Sam. So they actually own Tinder. So, that certainly helps out as well. They got the hookup site, and they got for the young kids, and they have the Match.com for the older generation. So
Fun for everybody.
right, exactly. So because of that data, because of that research I was doing on it, I looked at that. I looked at it with the technicals. Technicals were starting to line up once again. So when I noticed that starting to occur, I decided to jump in and once again took in a
Dale said giggity.
took in a bigger profit. And this is actually one of the ones, yeah, right. Everybody's a winner. So this is one of the ones I actually highlighted, I believe on one of my end of the day stock picking sessions or in the room. And I remember once again, another trader came back to me saying, you know, I got in when you talked about it. I held part of my trade through the earnings announcement and I ended up walking away with a huge profit. You know, thanks so much and everything like that. And I really love getting that feedback because to me, I don't just want to make money. I want all of you guys to make money too and to really grow your accounts and learn from this. So, you know, even though this was just one I threw up in the room and maybe talked more on the side of the technicals, I'm really excited to match that now with the data so you guys can choose these as longer term swing picks. And of course, the weekly chart was also showing us some great technical signals for a bounce and continuation higher. And this is exactly what prompted me to look at this and share it with, you know, everybody in the options room and things like that. So like I said, unfortunately, because it's on the PowerPoint, you probably won't be able to make it higher, but there is a zoom in button on the side that you can. And maybe in the recording afterwards, you guys can be able to zoom in on your own with the video itself. So I'd be happy to share these slides with you guys later to kind of show you, you know, they're saved images in my computer. So just let me know and I'd be happy to send them the screenshots so you can have a closer look if you want them. So tonight's webinar, right? What did we cover? We covered how understanding the concept of risk can be beneficial to your trading. As I mentioned, you will get that 25% rule as a free document to kind of hopefully help you if you've ever struggled with capital risk or, you know, maybe investing too much in your account or understanding how many trades you should be putting on at once or anything like that. Hopefully that can give you an understanding of the risk there. One of the other things we, of course, talked about that Jack went over is why being critical of the data can give you an edge on longer term portfolio picks. And of course, why the long game strategy can create excellent high probability swing trades for you to win with. And Alex, yes, the 25% doc will be emailed to you. So we do have a class coming up, not this Saturday, but the next Saturday. And so our goal in that class is to really help you guys fully understand this strategy, understand the data that we're looking at, how you can find that data to inform yourself, and how matching that with all the technicals that we just went through, understanding the tidbit technicals. A lot of those ones that I showed on my charts are free on Thinkorswim and most trading platforms. So you don't, you know, have to go in and buy a whole bunch of indicators to try and make this work for you. A lot of them are free and already available to you. What I like to do on the classes is make a little quiz following the class that goes through it. So that way you can actually go back and quiz yourself on the class, see what you retained, see what areas you might need to go back and refresh and review. And it's a great way to see if you really grasp an understanding of everything. And right now, the basic is only $397. The value of it is $697. So I think that's an excellent discounted price to be able to jump in early and try and lock that in if this is a strategy that you're really interested in learning. The Pro package also will include 2 live trading days, right? So I think the live trading days are so beneficial personally because it's a great way to show how both Jack and I in real time are using this strategy during market hours, how we're, you know, doing our research in real time, putting that with the technicals and finding these picks so that way you guys get not only the understanding of the class and all the education we have to provide, but how you can implement everything you just learned into actual trades. And of course, what I really love about the live trading days is, of course, we're going to be looking at trades to put on together. And ideally, some of those trades could eventually pay for the class and still let you walk away for a profit. As I mentioned, the AVGO example, I made over $7 per contract on. And that could easily, just off one contract, if you did that trade just off one contract, could easily pay for the basic or pro package and still have you walk away with a profit. And that was only one of the trades we did. So we can't say it's definitely going to happen, but our goal is to definitely give you guys some trades to be able to get into and basically pay for this class, so you're not really paying anything to have this education on your side. So what are our objectives, right? What are our goals for the class and what you can take away from it? So one of our goals is to have you leave with a better understanding of capital risk and ways to stay mindful of it throughout your trading. I think, and I know Jack agrees with this, if you leave the class with a better understanding of capital risk, then that is one step closer to you not blowing out your account, right? That is one step closer to you being able to lock in those profits and not have it be to where your emotion is driving everything and you're not blowing out your account at the same time as you're taking those profits and locking them in. Another one of our objectives is how to decipher the data surrounding a business and how it can give you an edge on creating long-term swing trades, and how the data can also create longer-term portfolio picks for you to hold on to. So that's another one of our big objectives that we have, of course, is, where do we find this data? How do we decipher the data? And kind of give you an easy to use checklist and things like that, so that you too have an understanding of what we do on our research side to, figure these things out, and so that you can easily do it for yourself. Another objective is we want you to leave the class with a full understanding of the long game strategy and how it could help you with engineering high probability swing trades. This is a great way for you to grow your account while not sitting at the computer for the full market day, right? It's a great way to be able to go out and enjoy life, or to do, maybe your job if this is more a part-time thing for you, and still be able to trade successfully for your account.
This reminds me, whenever I was going to see my back doctor a while back, I had been using this strategy and covering AMD, and he says, well, what's your pick this time? And I said, well, what's your risk profile? He says, well, I just don't know what to buy. I said, well, I've done a bunch of analysis. AMD is ready to go. It was what, 10 or 11 bucks back then. And, he's a kind of a crazy guy, and he ended up putting in at least 400 or 500K into AMD. And next
maybe
time,
not the understanding of risk tolerance,
but he understood after I explained to him how I look at things and how I decipher the data and go through things. He started to see it. He started to understand. So it's rewarding in that way as well. But like I said, like Allison was saying, our objectives is you'll have 2 full days of live trading to understand how to identify these setups and implement the long game strategy during live market hours.
Absolutely. And I think whenever you were telling me that story earlier, you mentioned that your doctor was able to pay for all 4 kids of educations.
All 4 kids in private school and college. So
that's outstanding, right?
Yeah.
So one of our last objectives, of course, is to introduce new ways for you to build your portfolio with data and technicals. And certainly, last but not least, how to grow an account even if you've struggled in the past. And Jack and I have both been there. We know a lot of new traders have been there as well. And so we really want to help get you past those hurdles if you've experienced them, or if you haven't experienced them, right? Completely bypass the hurdles. Don't even have to deal with the hurdles. And show a great way on how you can grow your account into something that's meaningful to you and helps you out with your life. So who is this class for? This class is for anyone who wants to take a look at building their account without having to sit in front of their computer all day. It's for those who may have enjoyed listening to the news and are curious on how to match the data that they see with the technicals that they have on their charts, as well as for those who have struggled to grow their account and are looking for a simple way in order to get back in the trading game. So once again, here's the packages that we have, the basic and pro. I've seen a lot of you ask in the chat here, how long do we hold the trades for? To be quite frank, some of them are longer term stock portfolio picks. So I, opened them earlier this year and last year, and I still have them in my account, right? Those are ones for me personally, I don't plan to get out of for several years at a time. I continue to plan to hold on to them. The others, like AVGO, I've gotten in and out of maybe in a week's time because I was taking multiple profits based off the weekly. And then there are times that I'm holding on to it a month or maybe longer. But it all depends, right? Whenever personally it hits my target for a profit, I'll usually take it off the table. So one of the great things that you can have out there if you've gotten into one of these long trades is to just put a good till cancel out there, and then you can just kind of let it go. And as long as the technicals are still lining up with all the data, you know, that's a good sign that oftentimes it will just go up, hit your good till cancel, and then you wake up the next day and you're like, oh, that got filled. That's great. I've, you know, locked in that profit along the way. And one of the main things about this class, I know with all of my examples that I have, is that these are very simple trades, guys. These are long calls and long puts. You can, you know, do things like vertical spreads on them if you want to, if you have a smaller account, but we wanted to make this really simple and easy with just a long call or just a long put on it being directional. So it's, you know, not these, you know, crazy butterflies or iron condors or anything too complicated. It's strictly getting in at a certain call or put point and then riding the trend up or riding the trend down and then locking in those profits along the way. And RC, yeah, I personally like trading options and stocks together. And we'll discuss how on stocks, if you decide to hold them longer term, how those trends can still help you with things like covered calls. But they're usually long, right? I personally don't like shorting anything in my account unless I already hold the stock to where I can short it against that. Otherwise, it eats up a lot of capital. And as y'all know from the start of the webinar, I am a very big person on capital risk. So that to me just isn't in my trading plan. But it's long calls and long puts, buying to open and then selling to close sort of situation. So another thing is we do have a bonus, right? So
there was a bonus.
Yeah, bonuses was always
we
good,
reward
right?
you for staying till the very end.
So for the first 250 of the pro package that sign up, we're actually going to add on a follow-up live trading session for free. And it will probably be roughly a month out. We can see here the date is Wednesday, June 26th. But we're adding that extra live trading day a month out because, as y'all have kind of asked and mentioned, some of these trades we hold on to for longer. So if we're still in them or something like that, we can rediscuss them on those that extra month trading day. We of course will be looking for new picks, right, to try and get into and make some more profits along the way. But it's a great way to kind of revisit any trades that we might have already gotten out of, or we might still be holding, how they're doing, you know, what we're still seeing with the technicals and the data. And then of course, you know, another great day for trying to get into some new trades and make further profits along the way. So now is your time that if you have any questions, thoughts on this, any feelings about the webinar, please feel free to ask and we'll be happy to answer those to the best of our ability. So I'm just going to scroll up here real quick, see if I missed anything. Yeah, not a problem, Joe.
Oh, okay. So do you only buy directional calls or are you buying spreads or butterflies? You answered that already.
Yeah. So for this, it's mainly focusing on just longer term trades. This is, you know, very simple long calls and long puts. I personally still love trading vertical spreads, butterflies, iron condors. I still do that on the side. But for this class, the main focus is to keep it very simple, right? We're at Simpler Trading where we want to keep it simple for you guys and just do strictly long calls and long puts. Do we offer an alert service? There will definitely be an alert service around the class and live training days. I mean, that's, you know, something we can always talk about going into the future if we, you know, get a lot of positive feedback on it. I'd be, you know, more than happy to share my long trade ideas still with you guys in the future. Absolutely. I see no problem with that. So, you know, it all depends on what can happen. So Gary, great question. What simpler trading indicators do you need for this? To be quite frank, the paid indicators, the focus for me on this was to try and stay away from that and use as many of the free ones as possible. So you don't technically need any of the simpler trading indicators to be successful on this. I will say though, the squeeze indicator, which is free on Thinkorswim, is one that we do use quite a bit. For myself who know me in the room, or maybe we're part of the profit recycling class, know that the compound breakout tool is one that I often use frequently. So I will be showing that one as well. But the idea here is that you can use these with a bunch of the free indicators already out there and still be successful. Cheryl, absolutely, you can use this for shorter term too. If, like I said, some of the times that I jump in and out of the trades, like AVGO, for example, sometimes I was in a week, sometimes I might have only been in a few days, but it's still matching up the longer term view to show that there's still strength and conviction on the move, but you can always jump in and out taking shorter profits along the way if you're maybe like me and sometimes you get a little bit impatient and just want to take a trade with the profit off the table. Absolutely.
Yeah, and I like to think of it like, as point A of the trade is entering the trade, and point B is, when you're ready to take profits, and that can be 30% or 50%, depending on not only your portfolio, but the volatility in the market as well.
So another great question is, how far out do you purchase the calls? Michael, that's a great question. We'll certainly dive more into it in the class. It depends. Like on a Hershey's, for example, earnings was coming up. So I didn't mind actually buying the expiration right after earnings because I knew it was going to hold on to a lot of that extrinsic and intrinsic value due to the uncertainty around the announcement. Now, if earnings isn't necessarily in the near future and, all the technical setups are still there, sometimes I'll buy a month out. Sometimes I'll buy a few months out. It just depends on what cost basis I'm seeing and what makes sense for my account, as well as what I'm seeing on the longer time frames and how much time it might take for that move to really occur to have a profit that I'm wanting for my account to take in. Yeah, another good question is, what is your stop loss strategy? You can look at that a few different ways. For myself personally, I like to still base it off the technicals. So if it starts to break the technicals, then I'll look to get out. You could certainly do it by the cost, right? If it gets to a certain point on the trade that you're losing and you don't want to lose anymore, you can always just close out. And then if it gets down to a level where everything looks right again, you could always jump back in still. But for myself, I like to base it more off the technicals. Is it breaking my technicals? Is it breaking the pattern that I was entering into? And if so, then I'll look to jump out of the trade.
Awesome.
Yeah. Nikki's asking, how are you entering? Do you use a 1 or 5 minute chart or daily for triggering in? These are more longer term picks. So I'm not really looking at the 1 or 5 minute chart for these. I mean, you can, I guess, technically on the day of that you want to enter. But for myself, I'll look at the daily typically for triggering the entry. And I usually look at the weekly and monthly for conviction and follow through of that. Sorry, we're just trying to go through these. They're kind of coming in. Will part of the class be screening or discovering these setups? Absolutely. So we'll definitely try and go through during the class towards the end of it, maybe finding some fresh setups for you guys in it. It obviously won't be during live market hours. But we still want you to try and walk away with a trade idea or two to implement that next week.
Yes, Ryan, this is recorded for sure. Oh, Darrell's got it.
Thanks, Darrell. How many trades are you typically holding at one time? It depends on what count I'm trading in, but for myself, I'll always stay within the 25% rule, which those details will be sent to you. But just very quickly to go over just the short term on what that is basically 25% of my account I'll put into new trade ideas that will be separated across multiple new trades, right? It's not just one. The second one is it will go, the second 25% of the account will go into any management of any new trade that starts to fall behind. And then I leave 50% of my account, at least 50% of my account untouched. So that way I always have cash buying power. It's never overextended. And if there's a month where I need to pay myself, I have that capital in order to do so.
One of the things that is one of my favorite things to hear Henry say in the rooms is cash is a position, and it's such a good reminder. So we will talk about that. Let's see, a lot of questions coming in. Great.
Yeah, Ash, is this different from the recycle profit and growing smaller accounts with John Cotter? Yes, it is. So the profit recycling class dealt with a specific strategy on how you could quickly, whether it was in a swing trade or an intraday style trade, recycle that profit back into your account. and it dealt with a specific strategy. This is simply just long calls or long puts, right? So it's still different from John's smaller accounts class. I know he did a few different strategies in there, and that was specifically for growing smaller accounts overall. This can be used for small accounts, but it can also be used for bigger accounts that you have out there. For those of you who are looking for longer term stock portfolio picks, anything like that, to where, it's more about if you don't want to be paying attention to your account all the time, this is a great class for you. If you're working and you don't have the time to be there in the market hours, if you're trying to build up your IRA account or something like that, then this is a great way to do that. Or if you're like my dad in semi-retirement mode and just don't want to necessarily be sitting there all day, maybe you get ADD or something like that, it's a great way to use this strategy in order to still trade and, grow your account and have those profits for yourself, but not be stuck in front of the computer all day, kind of, looking at all the technicals, looking at what's happening in the market, and then deciphering, moves to take from there. Nikki, how much wiggle room do you allow for stopping out? It really depends on the chart, right? So sometimes, there's a little bit bigger of a gap, for example, on a rising bias trade versus the support level. Other times the support level is right there. If it's further away, whenever I get in my entry, I do keep that in mind, and typically I'll look for a smaller risk tolerance in case it pulls back. So that way I can maybe jump back in, maybe not use my full opening risk tolerance that I would for a new trade. So that way, if I need to add more capital into the trade, I can. But we'll definitely go over that in more detail in the class. Absolutely.
Guys, thanks so much for listening to us. Thanks for coming in and joining this class with us. It's certainly been fun for us. We hope that, we can inspire you with a new idea.
Yeah.
And we'll see you in the class.
Yeah, absolutely. And just one last comment. Dale mentioned that he never thought of options and long-term trades going together. And, I can totally understand that. When I first started trading, I didn't necessarily think that. But as I've continued to use this strategy, and Jack's used this strategy, and we've kind of expanded on it, it can actually still make for some greater trades, and it allows it to be really simple and easy for you to still lock in some profits along the way, right?
And it was such a relief to, turn what just seems to be like basic intuition into something that you can put into practice and have a plan. And it's, we've given y'all some examples tonight that are certainly anecdotal, and we very much look forward to sharing this with you very soon in the class.
Paul, a minimum account size, that's a great question. I have a small account that I was doing this in, about 5 to 10,000. I also have another size account I'm currently trading in that's currently at this moment about 20,000. So I've been doing this in both of those accounts. So, it really depends. Of course, you can do this in larger accounts. Back whenever I was helping my family, trade their accounts, their IRA accounts and things like that, they were certainly a lot larger than my two. And I was still able to do trades like these and implement it as well and be successful with it. So I think it can be really for any size account. It's all about having that understanding of risk. So really, I would recommend taking a look at that 25% rule and understanding what it is. It might mean that you're not getting into all the trade ideas that we mention or talk about, or maybe not getting in at the exact strike price we are. Maybe you're going down to a smaller capital risk one. But if the signals are still there, if the data is still matching up, it's usually still ends up being a good pick for taking a profit. So yeah, thanks everybody again for joining us. We appreciate all the nice stuff that you're saying. There will be the recording, so feel free to rewatch it. If you have any questions that you didn't think of now, or maybe we accidentally missed your question, like I said, please feel free to email us, and we'll always be happy to get back in contact with you and answer anything that you have. So thanks a lot, guys.
Thanks so much, guys. And thank you, Darrell, as well.
Yeah, thanks, Darrell. Appreciate all the help. Have a great night, everybody. And as always, may the trade be with you.